This is Bazaar Morning Call, broadcasting live from the CNBC TV 18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We are coming to you from the CNBC TV 18 Motilal Oswal studios. And of course, this is Bazaar. We'll track markets for you. Lots to talk about with earnings, especially big ones coming after market hours yesterday. I'm Prashant. With me, as always, my colleague Sonia and Nigel. Guys, morning.
Hi, good morning, Prashant. Good morning, Nigel. And, you know, the bulls have pretty much tightened their grip on the market, right, in the last couple of days. And now with good earnings coming in from Reliance, strong cues from across the globe, looks like it's going to be another good day.
Well, that's right. Yesterday's close was very, very good. And at least now the action is away from the geopolitical issues.
Yeah.
You want to deal with the market, with economics, with companies reporting numbers. And we're getting back to that. So that's good news. Results here in India and big results coming in from the United States as well.
I think absolutely. And I think that's a relief that we're not sort of talking about missiles flying all over the place, right? I mean, you're talking about what's happening with economic factors more than anything else. So let's just sort of rewind the clock, tell you what you need to know as we begin another session. So you had a pullback yesterday, and the pullback was a continuation of the pullback that started last Friday. Friday, of course, was a big rally from the lows of the day. And yesterday it continued in a very good fashion. Actually, in the last 30 minutes, if anything, the market picked up more pace, both the Nifty and the Nifty Bank. And the Nifty, by the way, it went up 1,000 points, fell 1,000 points, and with yesterday's move where it's closed, it's almost got to the 61.8% retracement of the 1,000-point fall. That's great news. 2 or 3 days, and you're basically back at these levels, right? I'll come back to levels and what next here, but just a few words on the overnight action. U.S. equities had a pretty poor last week, and there was a rebound last night. Actually, it was pretty quiet all across. Equities went up, the Nasdaq, the S&P, etc., but nothing very much else. There was no news, there was no economic data, there was no Fed speak, and the market kind of drifted higher after sort of breaking some important technical levels last Friday. So there is, of course, I mean, it's not going to be quiet like yesterday through the rest of the week because you have, 5 out of the top 7 companies in the US reporting numbers. About 45% of S&P market cap reports earnings. So it's a busy one. So will these levels hold is the question. Was what we saw overnight in the US just like a one-day thing, and has something sort of broken there, at least in the very short term? People are still asking that question, and we don't have that clarity yet. As I said, it was quiet, so the 10-year did nothing. 1 basis point change, 4.61. You had the dollar index, which held steady above the 106 level. Oil prices, nothing at all, about $87 a barrel. And it's been there for the last 2 or 3 days now. As I said, earnings are going to be important. Later tonight, Tesla reports numbers. There's a big plunge in earnings, which is expected. And of course, with Tesla, we're not talking about not cheaper electric vehicles, but we're talking about a robo-taxi. So it's a giant of a company, which of course, before NVIDIA took over market leadership, Tesla used to be the big leader. It used to be the Pied Piper for the Nasdaq. It used to be the Pied Piper for the broader market in the US. I mean, it still is in many ways than one. And that reports later today. So can that move markets in a significant way? We'll know. PCE data later on Friday. I mean, we stopped talking about inflation for the last couple of days, but there's been a seminal change in market expectations for what the Fed may do this year. Rate cuts have been completely priced out, maybe one, and that's it. And, we're talking about a higher for longer regime, which I think we'll start talking about more and more into the rest of the week. And once we get that PCE data, which is only on Friday. Now, just to sort of tie all this back into levels, the Nifty, as I said, it got to, after the bounce, almost a 61.8% retracement. That number is 22,400, 394 to be precise. And that's the first level, which, that, in a way, it's a target. It's also a bit of a resistance, which the market should get to. Above that, you're basically talking about the all-time high of 22,775. There are a few other resistance areas. The 61.8 is one. The gap area between 22,430 and 22,500 is the next one, which should also act as a bit of a resistance zone for the market after the sharp move that we've had for 2 days. Near-term support for the Nifty stands at about 22,300. It's also, by the way, where the 20-day moving average coincides for the Nifty. So these are very near-term, short-term levels, but that's what we're working with. The Nifty Bank also retraced 61.8% retrace of the fall that it saw, and that number stands at 48,111. Again, so that becomes the first target resistance. Near-term support for the Nifty Bank comes in at 47,618. and that's the 20-day again for the Nifty Bank as well. Markets, as I said yesterday as well, towards the close, need to confirm that the leg down that we saw before Friday last week, is over, and slowly but steadily we're starting to build on gains. That, more than anything else, I think, is what we need to see for the rest of this week, even if we don't see big gains like we've seen over the last two sessions. GIFT Nifty will come up on your screen to give us an indication of how the start is. It's a quieter start, and I think that's exactly what we need. Not a big gap up again. So 30-odd points higher, slow and steady from here, I think will do the job. Sonia.
Oh, absolutely. I think, the bulls have pretty much tightened their grip on the market, right? In the last couple of days, you can see it in the ticker, the way the Nifty has moved. And today, I think Reliance Industries' earnings will be taken well by the street for a couple of reasons. It was a stable set of numbers, a strong set of numbers across verticals. So most verticals reported numbers better than what the street was estimating. The entire telecom space, right, whether you look at Jio, whether you look at the Vodafone FPO, whether you look at Bharti Airtel, all of these indicate that this telecom space will continue to be driving higher going forward. The retail numbers were also very good. It shows the strength of the domestic economy. In fact, the Reliance retail EBITDA went up 18%. The Jio EBITDA was up almost 9% year on year. And a lot of brokerages have gone ahead and upgraded their target prices and earnings estimates on Reliance Industries. More on that later. But, I was talking about the telecom space, right? Look at Vodafone Idea's FPO. It got a total demand of 1.25 lakh crores. And not just that, look at the other player, right? Bharti Airtel is sitting at a fresh 52-week high as well. So this entire space is going to continue to get some focus this morning too. Now, the Nifty, if you look at it, in the last 2 days, there's almost or 2 or 3 days, you'd have to say, there's almost a 500-point rally from the bottom that we've seen from the 18th April low. And that just goes to show that maybe some kind of a hard bottom has been formed in the Nifty and the bulls have come back in a big way. The BJP opened its Lok Sabha tally as well. It won the Surat seat uncontested. So that just goes to show the stability of the, the current government and perhaps what the outcome of the election could be. The only risk for the market perhaps is what's happening with crude. But on that front as well, because of the de-escalation of the situation with Israel and Iran, Brent crude prices are back below $88 a barrel. So that is something that, the market is looking at. As long as there's a lid on crude prices, this market could continue to move up. So the recipe is looking good. It's a good cocktail for the markets to move higher. But then, of course, individual stocks will continue to be in focus.
Well, that's right. So, now the point you made on Vodafone Idea, what subscription, right? More than 1 lakh crore, or the market capitalization is around 65,000 crores. Maybe if they took all the subscriptions, they would be, have the debt down by half or. But that's, that's a sector that we'll be looking at. Yesterday's session was very, very good. And the Nifty's intraday chart should come up for you on the screen. It's as beautiful as ever because the final tick was at the high point of the day, telling you that this market is trending up. And now the top points to track will be the risk-on environment is back on, because geopolitical issues have taken a bit of a backseat, and that's what will support the broader markets. Towards the final hour of trade yesterday, you had a lot of small and mid-cap stocks that did well, and the breadth of the market was very, very good. Well, on the Nifty, they've conquered the 20 DMA odd. Now it appears the 23,000 odd mark is on the radar of the bulls. The Nifty Financial Services Index, well, that's going to be the one that moves in the second half of trade, so we'll keep an eye out on that one. What did the FIs do yesterday? Well, they lightened positions, both on the long as well as on the short side. On the long side, a little bit more. And that's what takes the short positioning to around 66%. The next short positions are at around 1.09 lakh contracts, which is always good. You have shorts in the system. That's what will help us. If you get a bit of an up move, the additional 200-300 points will come because of the shorts in the system. So that's viewed positively. The 22,200 call, well, that saw a big amount of open interest. Yesterday, some of those call writers, they were packing their bags. They were saying, this market's got momentum. We have expiry coming up. Let's pack our bags and get out of them. And now the action has shifted to around the 22,350 to around 22,400 odd mark. On the downside, the 22,200 as well as 22,300 put, well, both of them were fairly active in trade. Between them, they added close to around 57 lakh shares, which brings us to the range. I'm looking at the resistance zone and a support zone. On the resistance zone side, the 22,550 to around 22,500 becomes the important mark. If we can breach this, then you're looking at another 300 points in that direction, in the northward direction. If the support breaks, this is an important support zone, going by some of the technical levels, going by the options data as well, then maybe we pull back 300 points on the downside as well. So that's the important levels that I'm looking at. In terms of the exact levels, well, on the Nifty Bank, the 20 DMA has been conquered. The next resistance comes in at around that 48,500 odd mark. So that's important as well. And the sector that I'll be looking at is, besides telecom, will definitely be cement, because Kesoram's numbers were weak. Part of the street was factoring in weak numbers. The EBITDA per ton was less than around 400 rupees per ton. But also now you're seeing aggression from the bigger names. Ultratech Cement, Adani Cement, both the two cement companies in there. So excess supply could be a bit of an issue that could weigh on sentiment as well. And since we have elections coming up, those price increases are not coming about. So I'll keep an eye out on the cement companies in today's session as well.
Okay, so plenty of sectors in focus. There's cement, there's telecom, and of course there's Reliance as well. But on the equities front, Jonathan Garner of Morgan Stanley says that Japan and India still top picks in the new era for Asian equities. He says multipolar world trends are supporting FDI and portfolio flows, while positive demographics and success in macro stability underpins a strong capex and profit outlook for India. He sees a secular trend towards sustained superior US dollar EPS growth versus emerging markets over the cycle, with a young demographic profile supporting equity inflows. Jonathan says valuations are at a premium at 22 times forward PE, but in their view, this is warranted by superior EPS and compounded growth rate.
Some money market views. Abhishek Goenka of India Forex and Asset Management says the rupee has hit a all-time low around 83.58 on Friday, but likely intervention by the RBI and revival and risk sentiment have caused rupee to come off the lows. He says the currency in the rupee and yuan have outperformed other Asian peers in April, so by a considerable margin. It goes on to say if US corporate earnings meet or beat expectations, markets may overlook diminished Fed rate cut expectations to some extent, and risk sentiment could remain stable. He says, barring any adverse geopolitical shocks, expect the rupee to trade between 82.8 to 83.6 over the medium term.
And on the bonds, Vishal Goenka of IndiaBonds.com says some calm has returned to the bond market as it was quiet on the global geopolitical front. With oil and dollar index retreating from last week, he says the important data this week is the PCE inflation and the quarterly GDP numbers from the US later this week. He says corporate spreads widen domestically as banking liquidity remains tight. He expects the markets to be range-bound and the 10-year benchmark bond yield to trade in a range of 7.17 to 7.22% as the market awaits further macro cues.
Well, we have a lot of stock-specific action to track for you. We get to that in just a bit. For the time being, we run into the list. We're looking at Reliance Industries, Vodafone Idea, Hatsun Agro, Tejas Networks, Patel Engineering and PSP Projects. All of them will be reacting to positive news flow. But on the flip side, you have Nestle, Mahindra & Mahindra Financial, Mahindra Logistics and RR Kabel. All of them will be reacting to negative news flow.